Welcome to QLM Business News. Here's a roundup of today's headlines. UK mortgage lenders slash rates. Coventry Building Society sets new benchmark. A growing number of UK mortgage lenders have slashed their rates in response to the fallout from US tariffs, which have fueled expectations of more aggressive interest rate cuts by the Bank of England. Coventry Building Society, for example, has become the largest mortgage provider to reduce its 2-year fixed-rate deal to below 4%, setting a new benchmark among lenders. Financial markets and economists are increasingly predicting that the Bank of England may lower borrowing costs more than previously anticipated in a bid to stave off an economic downturn. This shift comes amid heightened global economic instability following President Donald Trump's aggressive tariff measures on U.S. imports from over 60 countries. According to data from Moneyfacts, the average 2-year fixed mortgage rate has ticked down to 5.3%, while the average 5-year fixed rate has dropped to 5.15%. Specifically, Coventry Building Society's new 2-year fixed-rate deal is now at 3.89% until October 2027. Jonathan Stinton, head of mortgage relations at Coventry, explained that there is a growing demand for shorter-term flexibility in an uncertain market. However, this product is available only for borrowers with a 65% loan-to-value ratio and comes with a £999 fee. Other lenders, including Clydesdale Bank and Newcastle Building Society, have also announced rate cuts, while the Cooperative Bank is set to reduce its fixed rates on certain purchase mortgages by 0.14 percentage points. TSB, Metro, and Bank of Ireland have similarly made adjustments since the start of this week. Despite these recent reductions, many mortgage holders who are coming off fixed deals, particularly those that were secured before interest rates began rising in mid-2021, are likely to face higher costs when they refinance. Figures from the Financial Conduct Authority indicate that around 1.3 million homeowners will see their current fixed-rate deals expire between April and December this year. Brokers anticipate further rate cuts in the coming days, as the Big Six lenders, Halifax, Nationwide, HSBC, Santander, Lloyds, and NatWest, have so far adopted a wait-and-see approach, with many expecting that once one lender cuts rates, others will follow. Economists note that central banks usually respond to economic downturns by cutting interest rates to stimulate borrowing and spending, a move that has already been supported by a consensus among experts predicting up to 4 Bank of England rate cuts in the next 12 months, a significant increase from the initial forecast of just 2. A Nationwide spokesperson told reporters, "We keep our fixed mortgage rates under regular review, and we have already made a number of rate cuts over the last couple of months." Rachel Springall from Moneyfacts added that it typically takes a couple of weeks for lenders to adjust to volatility in the swap market. This news story is presented by QLM Business News, your go-to digital media channel. Visit qlmbusinessnews.com for the latest updates, and don't forget to follow us on Facebook, X, and YouTube. Support us by liking, sharing, and subscribing to help us bring you more stories like this.